All right, hello, and welcome to Camel Finance. I'm your boy Camel, and yesterday the triple Qs hit a new yearly high. So something weird is going on here. We've got tech absolutely dominating. We've got the S&P stagnating. We've got the Dow coming off. VIX refusing to spike. Bitcoin not really behaving how it would normally behave out of a cycle low. So things are a bit strange. Probably we're going to continuously, for the next couple of weeks, be bombarded with news in the media about debt ceiling. It will either be markets are up because debt ceiling looks to be resolved, or it will be markets are down over worries of the debt ceiling. Ultimately, there's a chance that they could default, but that's not how I see it. I see it that for the past 12 or 13 times I can remember this happening. Don't quote me on that number. That's what it feels like. They always have historically raised the debt ceiling. They often talk about minting a $1 trillion platinum coin. And then the US Treasury can gift that to the central bank and whatever. Look, at the end of the day, nobody knows. But as far as I can tell, they're probably just going to raise the debt ceiling. This is likely all going to get swept under the rug. And they're going to keep going. They're going to keep printing because that's ultimately what they want to do. There is always the chance that they want to control demolition. But let's not worry about that until we have some confirmation of that. Retail sales came in yesterday. And as you can see, significantly below the expected and the previous. So we had a big miss on retail sales yesterday. But remember, the market always finds ways to provide maximum pain for the majority of market participants. We still have the net speculative positions, the most short they've been in 15 years. The retail sentiment is very, very bearish, significantly more bearish than average. And we see smart money accumulating whilst the dumb money is selling. So if I hop into a few of these charts here, you can see here's the S&P in red, right? The green bars down here are the non-commercial weekly net position in the S&P 500 futures. As you can see, significantly more short than we were back here in the C19 era. You can see as well, the sentiment remains historically bearish, significantly above the 31% average that we typically see. In red down the bottom here, you can see the dumb money offloading stocks, whilst in the blue, we have the smart money, the institutions accumulating here. Maybe they know something that retail hasn't quite figured out yet. We also have the Bank of America Global Fund Managers Survey is historically a contrarian indicator. Fund managers are the most pessimistic during market bottoms. And I've said this before, I'll say it again. The reason for this is not because they're incompetent. It's not because they're stupid. It's simply because they're trend followers. We have been in a downtrend. They have been following the trend down. The trend has not yet completely confirmed a trend reversal, although I do believe we are close. We will always see very, very pessimistic positioning from hedge funds because their job is not to catch the bottom. Their job is not to buy the bottom. Their job is to wait for a trend to establish and to follow that trend. At the top here is that same fund manager positioning chart. Down here is the Dow Jones. And as you can see, whenever these funds hit the lows that they're in now, whenever we get down to this range of pessimism, this, historically speaking, has always marked significant lows in the Dow Jones with significant upside thereafter. It just tells us to keep an open mind about better than expected outcomes walking forward. Over in the crypto world, we had a big piece of very sad news yesterday regarding Ledger. Now, I put out a whole video with a deep dive and everything you need to know. So you can go and watch that if you want to, if you haven't seen it already. If not, I've prepared a too long didn't read for you just to summarize this very quickly. Your crypto is safe, for now at least anyway, and that's if it's on a Ledger cold wallet. So there's no need to panic. There's no need to do anything brash. You've got time to sit and assess the situation. You've got time to go shopping for a new cold wallet. There is no need to panic. But Ledger have introduced this new ID/know your customer link to the cold wallet, which means that you could potentially become a target for hacks, malware, leaks, or even home break-ins, since if somebody can get hold of this KYC, they'd be able to know whether or not you held a significant amount of crypto, and of course it would be linked to your address. Keep in mind in terms of leaks, Ledger has been subject to a data breach before, so it wouldn't be the first time if something like this was to occur. A few people have reached out and said, yeah, but isn't the service optional? Listen, yes, it is optional, but that's not the point, because the service allows the seed to be sent from the device. Now, if that's true, then it's no longer a cold wallet. This means the ledger is operating as a hot wallet, and this completely defeats the object of having your seed stored offline. Remember, if the seed can be sent from the device, it also means somebody could intercept it. And there's a risk of season freeze, as the government could force the hands of the trusted custodians that are supposed to be holding a third of this encrypted seed, a shard of the seed. In addition to this, the code base is not open source. That means we can't verify it. There's no way to verify that only Ledger users can decrypt the seed shards. So again, we just have to trust their word for them, and they are not exactly a center of trust at the moment. The trusted custodians could even conspire against users, and again, there's just no way to verify that they can't. There's no way to verify that we're the only ones that could decrypt the seed shards, and they certainly could be put under pressure from the government, have their hands forced to hand over the keys if the government so decided. Small silver lining here, it seems to only apply to the Model X and the Plus models. So if you hold a Ledger Nano S, you should still be okay, but do not take my word for it. Even if you hold a Nano S, then it's time to replace it, because they could always, in theory, update the software at any point. If they can update your wallet software and backdoor it so that it could send your seed from that device, then that should be all you need to know, right? This is done. This is over. And in summary, I think we will look back at this in a few years' time and we'll say things like, do you remember Ledger? Do you remember Ledger? Yeah, they messed up, and they messed up really badly. So what a shame, but it is what it is, okay? What are you going to do? You're going to have to protect your crypto. You're going to have to take responsible ownership. And sometimes these things happen, right? So anyway, there's plenty of options out there to choose from. Like I said, for now, the crypto's safe, so you can relax for a bit, go shopping, find yourself a new cold wallet. Bitcoin continues to look impressive apart from the short-term price action. So only 3 other times in the past year have we seen $750 million or more of Bitcoin withdrawn from Coinbase in a single day. The other 3 times, the Luna and FTX collapse, both which marked local bottoms. You can see here at the hard right edge, people are withdrawing their crypto. 3 years ago, the Bitcoin network had settled a cumulative total of 13 trillion in transactions, and today that total is over $100 trillion. So again, under the hood, Bitcoin continues to improve, it continues to scale, it continues to be adopted. This aggregate risk model for Bitcoin shows that we're in the early stages of a bull market here, just like we were back here, back here, back here, and back here. Again, speaks to keeping an open mind about better than expected outcomes walking forward. Bitcoin has officially spent the longest amount of time under its 2-year moving average, a full 1 year. We are only inches away from a cross, and Bitcoin has offered us plenty of time to accumulate. Just think, these are the lowest prices of the cycle, and the best is yet to come. We spent just 3 months under the 2-year average. Here we spent 11 months, here just 6 months, and we have now spent a full year under this moving average. For the price to cross back above historically marks big moves for the price of Bitcoin, and we are just a few $1,000s away from that. Philip here, the creator of the R-Hodl ratio, says that when he created this thing in 2020, one thing that struck him was how it showed a new bull run forming when the ratio of the value of the younger coins began to increase. This is exactly where we are right now. So don't panic about small price pullbacks. Zoom out, get your allocation and zoom out. As you can see here, very good things happen to the price of Bitcoin walking forward every single time we had this exact set of conditions that we have today. And here we have the altcoin cap divided by Bitcoin. This is suggesting we are at the early stage of a Bitcoin parabola. So you can see here, we have the total 2 putting in lower lows while Bitcoin puts in one of these. And that's exactly what we have today, right? Couple this with the RSI showing higher lows. Again, exactly what we have today. So the big picture doesn't look too bad, does it? The big picture looks like there's a good chance that we could see further upside from Bitcoin and possibly even the stock market. Although in the short term, perhaps we've got some volatility to work around while we get this debt ceiling resolved. It's likely this dollar index is going to put pressure on risk for a little bit. Seems to me like it wants to have a crack and a logical move up into this yellow downward sloping resistance line. I do expect this to roll over. Now, if it doesn't, if we do get a breakout here, then I think we have to go to plan B. I think we have to entertain that we're not going to have some kind of melt up and blow off top, that perhaps things are going to take a lot longer than I'd anticipated. So I'm keeping an open mind here. All the while we're underneath this, all the while this green squiggle is playing out something like this, then I think the original thesis still holds. But if we get above here, like I said, it's time to start thinking about an invalidation and a pivot of posturing and coming up with a new idea and a new overall thesis. So Bitcoin, have we still got a cycle low in place? So far, so good, right? We haven't moved down. We haven't taken this out. This does look weak, but it wouldn't be the first time that it looked weak coming out of this cycle low. It took a little while to get out of this one. So I was hoping we get something more violent like we had last time. We haven't had that yet. Now, any day, some kind of catalyst could come out, some kind of news about the debt ceiling, and this could obviously send this plummeting or skyrocketing. Given we have a cycle low in play, I'm pretty confident this is indeed a cycle low that we've got. I believe we are in a new cycle. So it's reasonable to expect upside. invalidation for this idea would be a stop. So if I get stopped, if we come down and take out that low, then of course we have to reassess the situation. But for now, I think it's a case of long and strong and see what the market can give. XRP, not really caring about XRP at the moment. We've got this little pop up, but this is just for me to say, if you're getting excited about this, don't, or at least I'm not, until we break out of here. And I don't believe that's going to happen now. I don't believe we're going to do this for XRP. If we do, then we can entertain longs. But this green squiggle of mine, I still believe that that's what's going to play out for XRP. So not getting excited about this for some length of time, but get down here and then break out. And I think then Camel can be very, very excited. Is Ethereum, so still kind of hanging around break even. Not much more to say about that. The crypto related equities all kind of still hanging around their entry points. So are we going to get a resumption? Are we going to get a stop? Remember, all of these positions kind of function as one position. So they've all been sized down. So the overall risk, if one of them gets stopped out, because obviously if one of them gets stopped out, they're all going to get stopped, right? So the overall position has been sized so that I'll only take a 2% loss on my total account if all of these get stopped out at the same time. But for now, we're long, we're strong, we continue to push, and we'll just see if Bitcoin can indeed confirm this new cycle. The S&P 500 still hanging around break even, slight loss on that one at the moment, but we'll see how it goes. Still waiting to see if we can confirm a cycle. Can we get a breakout? This reminds me of this consolidation. Where have we seen this recently? Well, we've kind of seen this with the NASDAQ, right? We had this big consolidation and now it's started to resolve to the upside. So still pushing this long from our breakout back here, and we'll see what the market can give. The Dow Jones coming in for what I hope will be a double bottom. Now that is to be determined. If we start to get back down to break even, then I'll just cut this trade. We'll push the winner of the NASDAQ and we'll see what the market can give for the S&P 500. So I'm not going to tolerate a loss on this. I'll probably exit this for break even and go back to neutral if the market comes down to that level. The VIX still refusing to spike, isn't it? So again, similarly with the dollar, if the VIX is going to follow my green squiggle down as the dollar gets rejected and rolls over like I showed you earlier, then I think we're still game on for seeing new all-time highs this year. But if this starts to break out as the dollar is breaking out, if we start to get major spikes in the VIX, then that is obviously going to require some pivoting from me and my posturing. So one day at a time, as always, open to anything. But for now, it's right until it's wrong, and we are still currently remaining on the right side. UKX looks to have completed this first part of the green squiggle. So can it pop up here, breakout, retest, and go? If so, that can be a long from me. Just another trade setup called out well ahead of time. Apple still above the blue line. So all the while we're above here, we'll continue to push this long and see what the market can give. And IPX coming in for a back test of the breakout level. So are we going to get something like breakout, retest, or resumption? That's to be determined. But for now, not too worried about this. Long and strong, continue to push. And lastly, the precious metals. Gold is breaking down. So again, gold seems to be following my green squiggle. Are we going to get some kind of move down here? The big question is, do we lose this second level, this big one here that you can see that I'm highlighting? Because if we lose that, then that's going to open up major downside. To be honest, the way I want to play this is to just draw a trend line wherever it forms. Something like this, right? And then by the breakout, I think wherever we end up having this final flush out, wherever this ends, I think that will mark the start of the next true bull market for gold. So we've had this kind of triple top. It would make sense to me that we roll over here, we have a deep dive down, something similar to this, and then we break out and go. So we'll have to keep an eye on this, but for me, I don't think this is the likely case anymore. I think it's going to look more like this. So I'll move this down here and we'll see what the market can set up for us. When that happens, I think it will also be time to repeat this sort of process for silver. So I'll kind of grab one of these, right? We'll set it something like this. I imagine it will look like this, right? It will come down here and we'll buy the breakout from lower down at the same time as we long gold. And then I think it will be time to entertain these minor positions as well. But for now, relative weakness across the board, so not really interested in metals. The thing with metals I've found is it's really good. It's the best way, or the way I like to do it, is I like to wait for these real big drawdowns like this and then go long here. I did really well at capturing the bulk of this move here live on the channel. So I'm looking to repeat that again if we can get it. But for me, it's a patience-based game. I have no idea what's going to happen in here. So we could easily hold and have a crack and break out all-time highs, in which case we'll go back to this. But for now, I think let's see if we can get a nice deep flush, because those trade setups when they occur are really simple, really easy, and really effective to capitalize on. So if we can get a bleed down here and then a breakout, expect me to go long. So that's it from me. We'll see how a week goes. We'll see what can unfold, see what kind of catalysts come out, whether they're good or bad. We'll see if these cycles can confirm, and we'll continue to take it one day at a time. So I hope you enjoy the rest of your week. Take care from me. All the best. Cheers. Bye.